Right, thank you very much for attending, all of them. I think I've just solved those little technical gremlins that I was having for a moment there. So let's move swiftly on. I think you've probably all read the risk warning at this stage. I think, but might be right in saying this is my first weekly market analysis webinar of 2018. So very glad to be here. Glad you're all listening. Let's move swiftly on to the charts. So going to start in the usual order here. Start with the currency markets. So at the moment with the euro, we're in a clear uptrend. You can see that through the 20-period moving average pointing pretty clearly higher on the daily chart here, and the fact that we're making higher highs and higher lows. But we are seeing some rejection from the 123 level at the moment. I expect that 123 to eventually give way, but you're seeing some rejection in the price level, and what you're also seeing is a bearish divergence in the RSI. So if I just bring up my notes here, looking specifically at the euro, trend is up, but I think there is some support down here at 121 at the old high. So potentially, given that we've had 2, 3 failures at the 123 level, there's a potential here that we get a slightly larger pullback, but the trend is still up. Bear in mind, so 121 is going to be in and around the 20-period moving average and that old high, so that's a potential support there if this bearish divergence follows through. I'd personally be reluctant to be short the market, because to me the trend is still to the top side. Let's move swiftly on to sterling. This market's looking a lot stronger, but again, a little bit of a sign of rejection here. Remember, we're heading right towards this big 140 level, so not surprising necessarily to see some participants, which you first saw with this candle last week, trying to sell in ahead of the big round number. And so we've had a bit of a rejection here, not even quite at the 139.50 level, a little bit ahead of it, around 139.40. So I've said in my notes here a tweezer top. To be honest, I can't remember if it's officially a tweezer top, if it's got this middle candlestick, but what you're seeing basically is two quite strong tails on the daily candlestick, rejecting from that 134 level. From the 139.40 level. So to me, that points to potential for a slightly bigger pullback, and that probably offers some opportunity, because again, we're in an uptrend. We're looking for pullback opportunities. So one might be down here where we had that first initial run up and breakout above the 136.50 resistance, and so we pause for that one day, and then we get the breakout, the test again. So if we come back to there as a support, it's about 137.50. That potentially could be an area of interest. I think the key level is that breakout area, which is the 136.50, which I have down as the support, and resistance is that big round number. Dollar yen in a broader range, obviously, but we've had a couple of down breaks recently. So we took out the 112 level support. We came crashing down through the 111 support as well, but we've kind of chopped around since then. We had this big bullish engulfing candlestick, and so that didn't get much follow through in the last couple of days. We fell back through this old support level at 111. Now we're pushing into it again. So to me, I've said in my notes here, it's a bit unclear what's going on, to be honest. We're in a broader range environment. We're trying to take out this support, but it's making hard work of it. Looks to me like potentially we get another little run higher here, and that may be a more solid opportunity if we think that this big strong down leg is going to continue, and that in fact we go, and if I zoom out here, if we are going to go and test the bottom of this range down at 108, there may be a rebound up to 112 of some opportunity. It's not clear to me what's going on at the present, so I think it's difficult to call the market direction. This is a bit of a chop going on, but if we get a little rebound up to what was clear support could be a clear resistance, and again a bit of a kind of more value opportunity to potentially go short the market here, up and around the 20 period daily moving average, which is pointing to the downside. Let's move on to indices. So to me this looks fairly clear cut. So we've had a nice breakout, more broadly speaking, above the 7600 level in the FTSE. We're in a clear uptrend, and we've basically just had a pullback to the 20 period moving average, which happened to be this old high here, where we had a rejection for a few days. So you can see here through the fractal that this was basically the previous high before we made this last run up. And we've come down here and we've had a bullish, not entirely convincing, but nonetheless a bullish engulfing candlestick on the daily chart. So to me, we've pulled back into that bullish engulfing candlestick pattern about 50%, and to me logically we push a bit higher up from here. It's been a deeper pullback than we've seen obviously in this strong long run higher, so maybe it ends up being a double top, but still good chance we get a retest to that 7800 level at the least. So that's why I've got the 7800 on here as the resistance to the UK 100, and then the 7690 basically are, you know, where we just recently rebounded from as the support, and then the bigger support should this 7690 level give way is down at the 7600 level. I think while we're above there, we're still looking pretty good in the UK 100. So obviously just a very powerful market still on Wall Street. Potential little candlestick setup at the moment is, you notice we had this quite decent bullish candlestick here, and we've had a couple of inside days. So if we get a break through this most recent day, or is the more aggressive entry, or the more conservative entry is to wait for the record high there and a break above that as the first inside day mark for another push to the top side. Equally, you know, it's not something that's worked too well of late, but if we do get a break of these two inside days to the downside, potentially spelling a bigger correction, 25,700 was that tail here, but then, you know, maybe we even get a run down to the 25,000 mark, which obviously was a big round number that we didn't really see much pullback to before. So we obviously powered through 26,000. So maybe we're sort of running out of steam above 26,000. We drop down to the 25,000 mark again. But, you know, still no evidence of that yet, but something to look out for. You know, the two inside days is quite a powerful setup, so it's adds a bit more impetus to feel confident about going to the short side should it break to the downside. But clearly the trend is up though. Germany 30, so we're trying to test this 13,500, the old record high mark. So that resistance still is in there, the 13,500. Support, I would say, is basically where we are. So there's a risk we do, so see how we've broken up with a strong candle, and now we're kind of consolidating here. Looks very similar to what happened here, as we had this resistance, we had the strong push higher. We didn't close significantly above it on that occasion, to be fair, but then we did have that couple of consolidation kind of tweezer top, spinning top days, and then eventually turned lower again. I don't think that's going to happen this time. It looks like the market's got a bit more strength, like we were going in a kind of sideways range. Now it looks like we found support off the middle of the range and that 20-day moving average, and it looks like we're kind of pushing off from there to re-begin the uptrend. But we just need to take out 13,500 first. But in the meantime, if this support level holds, former resistance, now support holds at the 13,400, you know, that's a good sign. So at the moment we're holding it, but obviously, you know, if the market was looking a lot stronger, we'd be at a much higher prices. The opportunity wouldn't be as present, but at the moment it's just kind of consolidating. Moving over to commodities, well, we've basically hit that huge big round number in Brent, the 70 level, and we've pulled back from there. This is a weekly chart that I'm on here, so if we get a break, so that was an inside week that we had last week and a bearish inside week. We're pushing down to the bottom of last week's low. If we get a close for the day through there, and the fact that we're coming off this, I mean, it's a clear uptrend, but the fact that we're coming off the big 70 level, and we've had that inside week, a daily close below which this level here, which is basically 68, could actually open up some more downside here. So potentially a bearish setup here. If you're willing to go up against the trend, you do have an inside week pattern and that big 70 number to trade off against. Gold very much acting as it should, I think, in an uptrend. You know, the uptrend's pretty much still intact. We had that powerful move higher, a little pullback, break up, pullback from what is basically the 1340 level. Found support at the old resistance. We're rebounding again from there. So it looks like this trend should continue for a retest of that 1350 level, or sort of 1357 is the kind of precise high. So that's how we're you know, we're categorizing our levels here. The support down at 1310, which is that low here. So potentially, if we can't make much of this bounce from the old resistance, maybe this support, which has worked a few times down at 1310, can do it for us to then make another leg higher. If that 1310 gives way, then, you know, we'll probably just resume this very kind of choppy environment for gold, where we've moved from overbought to oversold levels. We've obviously had a couple of runs into overbought. We're back down again, but that doesn't necessarily mean the uptrend's over just yet, in my mind. And then, don't know if I've just got it on here. I did. There we go. Last but not least, Bitcoin. So it's that 9,200 level, which was the low from the recent correction. The initial wobble that we had was down at 11,200, and that's basically where we're consolidating around at the moment. You'll see. For me, the market looks like it's in a downtrend at the moment, you know, categorizing it as below that 20-day moving average, making lower lows, lower highs. So to overcome that, I'd be looking for a pushback through that resistance, basically that 12,800 level, because that was quite an obvious support. If we can get a close above there, it would suggest that no one's willing to sell what was support turned into. It's basically that old support hasn't turned into resistance. If we get a close above there, and that would give me a bit more confidence to start leaning on the market again. So that is about it. Thank you very much for attending today. Good luck with the trading for the week, and I hope to see you at the same time next week, 12:30 GMT London. Cheers. Jasper signing out.